Hey guys, how you doing? Welcome to the Everything Money channel. Thanks for joining us on our live stream, our Tuesday, Thursdays live stream. As always, we're here with my Uncle Paul. Dear Uncle Paul, how are you? You're dressed in all black like a ninja today. How are you, my friend?
We were supposed to do our computers today, but I was in my closet looking at my assortment of white and black shirts, and I said, okay, they want me to wear black, so I'm going to wear black. And then you messaged and said,
you swap screens, you're kind of...
oh shit. And then you went and said,
always wear black. Always bet on black.
Passenger 57.
Passenger 57.
The worst. It's like you ever play roulette? Yeah. And then he goes, always bet on black.
Well, Paul, a lot of our stock investors sort of think like that. We're definitely gonna go over some ETFs today. What I mean, think like that is just sort of blindly go with what they think as opposed to some numbers. For example, Paul, we all know that the news today is that Airbnb is launching today on with their stock.
Is it today?
I think it's today. Yes, it's today at 1 o'clock or something. Mo, is that
correct?
Yeah,
what was yesterday then?
Now I saw a video. A friend of ours on YouTube. What's his name? George something. I have to click on it because I have to see what these guys say. He said, the IPO is launching today for Airbnb, and just mark his words. 100%, absolutely, you will 10x your money when
he
you
actually
buy.
said those words.
Absolutely, Big 10, guaranteed. All the other hotels are going to go out of business, and Airbnb is going to be the one that survives. And of course, Paul, we had another a great fan of ours just recently say, just in the comments, look above, Daniel, I love you, but he said, look, if Airbnb comes out,
he was joking.
He was joking.
I told you that. Yeah, he was joking.
Oh, okay. Well, regardless, I think people think this, that if Paul, you got to get off YouTube on your computer.
It's not on me though, so it's on you, so I can look at that.
Oh, thanks.
I want to look at the comments.
I see. I got you. Yeah.
And the numbers.
So yeah, he said if the IPO comes out between 50 and 70, I'm absolutely buying. And
he was joking.
Okay, but people do think that.
So let me.
And my thought process is why? Like, why? Just because something comes out, I think people. So, folks, we're going to get to your ETFs. Absolutely.
I want to tell a great story.
I have a whole list from our patrons. Our wonderful.
That's not your handwriting. That's
Don's. It's wonderful.
Don has the best handwriting in the world.
But our patrons all requested ETFs they want to hear. We're going to go over them. And as well, if you're part of the Patreon group, we absolutely love you. We will be going live this evening from Paul's house. Myself, Uncle Paul,
7:30 Eastern time.
7:30 Eastern. We will be going live for an uncensored discussion on anything you guys want. We love our patrons. But Paul, go ahead and tell that beautiful story you're saying.
So guys, this is very important because this is all about understanding investments. I told this little group chat that Mason's in as well. Mason's one of the few lucky people who gets to be in a group chat with me. There was a buddy of mine from 6-7 years ago texted me the other day. He sent me a screenshot of an investment pitch. He said, Paul, does this thing look good? And all it was here are your projected returns. Now, he's a very successful man. He makes multiple seven figures a year. Young guy, like 36 years old. Makes a lot of money. He has three very successful businesses. And he literally looked at their returns and said, is this a good deal? So what did I say? I said, well, those returns are based on their projections. The question isn't, are they good returns? The question is, are there good assumptions that can get those returns? I've never seen anybody ever pitch me a deal and say to me, this is a terrible deal, you should not invest, right? So I said to him, listen, I don't know what this deal is, but if you want me to get in a phone call or a Zoom call with the sponsors of the deal, I will gladly do so. Boom, he worked fast. That day, yesterday, we had a call at 5 o'clock. The call comes in. Start the call, guy in LA. I'm not gonna mention any names. Starts using fancy words like vertical integration, synergies. Starts using all these MBA words. Starts talking about where he went to college, all these things. We went through about 15 minutes of his like, hey, I'm the guy, I'm the one raising the money, I've never done real estate, blah, 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 but I'm gonna do this deal. So I said, listen, let's just get to the nuts and bolts of this. Let's look at the numbers. To which he says to me, well, I'm not really the numbers guy. And I'm like, well, you're raising the money. And I didn't say this, I'm being polite.
Say what?
Thank you.
Okay.
This happens very often, where people who are selling the deal don't understand the numbers. Okay, I should have said ahead of time to my friend, make sure you tell him that the person who understands the numbers needs to be on the phone call. So all I did was something very simple, guys. I just asked, how did you come up with this number to every single number on the Excel sheet? And guess what? It was abysmal. Fast forward to the end of the call, I got a text from my friend, and all he said was, poor guy, I'm embarrassed for him. It was bad. At one point, he saw an out, shut his screen down, and just started asking my buddy about his goals in life and things like that to deflect completely from the situation. He had no clue what he was talking about. Zero clue. And this is a guy who claims to be worth, he and his family are worth hundreds of millions of dollars, which, by the way, I wouldn't deny. I probably it's true, but that's my whole point. It doesn't matter how much money you have. It doesn't matter what you've done in the past. It doesn't matter when you went to school. If you don't have the right process, you are going to end up failing at some point in life. And that is my entire point of all this. You're going to meet so many people pitching you investments. Ask very simple questions like, how did you come up with this number? How did you come up with this number? He just tried to use very big words, fancy words to deflect. And at one point I'm like this, hang on a second, just hang on. What is this number right here? And that's when I noticed he shifted because he realized I wasn't going to, he's probably used to everybody saying, oh, it sounds pretty good. This is great. At one point he switched it from it's a great deal to, he goes, well, these deals will do what they do. I'm here trying to establish good relationships for future deals. So he went from this is a great deal to I'm trying to get future good deals and establish good relationships. That's code for, I have no idea what I'm talking about. This is my way out of it. This happens all the time with financial planners, wealth managers, everybody raising money. It's especially prevalent during boom times. Because when everybody's making money on every investment they do, it's easy to get away with BS comments. So we finished the phone call. I called my buddy up. He goes, man, that was bad. I go, listen. He goes, I'm really glad you're on the call. I'm like, listen, I told you I asked very specific questions. I was never rude with him. He goes, no, you weren't. I was like, I just asked him very specific questions that when he couldn't answer, I was like, well, wait a second. And my experience has been this. And of course, he deflected things like that. I'm trying to teach everybody here that you have to ask why. That's all I'm asking. And understand why you're asking why. It's okay to sit there and say, how did you get that number? We're raising money right now for Dynasty Owner. You know, for our fantasy football startup. Tim is the operations guy. I'm the numbers guy. Tim talks purely about the operations and the game. I talk about the valuations and the numbers. That's it, because I know them. If somebody asks Tim the question about numbers, he goes, Paul will answer that question. He deflects to me. If they ask me a question about the operations, I have no idea. I go to Tim. We work in tandem that way. But if you're out there, if somebody's raising money from you, they should be able to explain things to you. Because if they can't explain to you how they're going to make money, they will never be able to explain to you how they will lose money. And that's the key there.
What we're trying to do on this channel, as always, is bring you Paul's take on how he got to this state, how he came from money. Not originally, Paul, but have your family's money, how you've been just slaying business and investing for the past 20 years. You've been addicted to these discipline ideas since high school. Paul and I went to high school together from 1995 to 1999.
Can I interrupt?
Go on, Paul.
I thought these were the ideas I liked, but I saw what everybody was doing. I'm like, I must be wrong. I remember in high school asking Mr. Rohr, our investment club president,
yes,
how do they come up with the value of a stock? How do you do this discounted cash flow? And he goes, some analyst does that. How many high school kids ask that? Now, in hindsight, I look at that going, I wish I'd been there to say to him, just follow that path. But I didn't. I thought I had FOMO then. I was missing out. So I still lost money on a lot of tech stocks that went to nothing. Global Crossing, go look up Global Crossing. I bought Global Crossing. Go look that one up. One of the fastest rises and falls of all time. I bought it because why? My sister's friend's father told me he made a lot of money on it and I was missing out. And I was like, then I gotta buy it.
Of course.
And I lost a lot of money off of it. So that's just the whole thing. I was in the same path you guys were in at some point. I was in the same seat. I was just fortunate enough that when everything fell, I didn't lose as much. And I was able to sit there and say, my stubbornness let me go. I'm going to learn this the right way.
What we're trying to do with this channel is let you not have those big failures, is to learn from your Uncle Paul. And we will start today with probably a more boring topic than our competitors are talking about. Paul definitely strays myself, all of our friends, and you as the viewers, our patrons, away from those high hype stocks. I have argued with Paul about this. He will not put out the clickbaity. He will not put out the clickbaity thumbnails.
Literally, we've argued about this. We've literally had arguments where Seth goes, "We need to do this," and I go, "No."
Well, so I'm just letting you know.
We're trying to do marathons here, Seth. We're not sprinting.
So today we're going to talk about ETFs. Paul, just generally, go back to maybe someone who has no clue what's going on. They've just come across us on the live stream. Obviously, make sure, pretty please, you guys are smashing that thumbs up. But Paul, why do you steer people toward ETFs as opposed to just the stock market in general?
By the way, do you like this, Don? Your idea?
Yes.
Brilliant. Okay. 82%, I read this years ago, so I don't know how true it is now. 82% of mutual funds do not beat the market on a year-to-year basis.
What's a mutual fund? ETF?
A mutual fund.
Different from ETF.
Yeah, a mutual fund is a actively managed set of money where they actually do research and try to beat the market. So only 1 in 6 will beat the market. Okay, so on a given year, if only 1 in 6 beat the market, what are the chances to beat over a 10-year period? Now, every single year, it'd be 1/6 to the power of 10. But even on a 10-year basis, overall, it's in the less than 1.5% range. So the idea here is, why are you paying 1% of your money? Because that's what they're going to charge you. They're going to charge you 1% per year to go have your money in this mutual fund in order to operate the mutual fund. Why pay that when you can buy an ETF? An ETF is an exchange-traded fund that basically acts like a mutual fund, except it tends to follow a certain index or a group or industry or sector and has very low costs. Let me show you an example. The one I like for S&P 500 is called SPY. SPY follows the S&P 500, and look at its expense ratio, 0.09%. That is not 9%, that is 0.09%. That means for every $1,000 you have in there, they're charging you 90 cents per year. That's it. As opposed to some other company's going to charge you $10 per year. You don't think it's a lot of money? It adds up really big. Over a 30 or 40 year period of time, you're talking about 30 or 40% less money at least over that period of time. It's actually probably at half.
What does a financial advisor charge you to take your money and then put it in the fund?
Exactly.
Paul?
So then a financial advisor is going to charge you 1% per year on top of what the mutual fund charges you. So then you're getting charged 2% per year, and you're likely to not beat the market. But here's where people get confused. Here's why you can get away with it so easily. Let's say you have a mutual fund for 40 years. Over a 40-year period, the market will do about 10% per year. So Seth, I'm going to do some numbers here.
Uh-oh.
Let's say you give your manager, now let's say they match the market, but you're still going to pay them that 2%. You're making 8% per year. Does that make sense?
Will you clear the screen? Just switch over.
Right. Sorry. I'm an idiot.
And every time you curse, we lose monetization, by the way.
Did I curse?
Twice. I love you.
Awkward.
We love you.
So 8% per year is what you're getting. The market does 2%, 10%, and let's say they match the market in their performance, but it costs you 2%. 1% for the mutual fund, 1% for the money manager. But let's say you have it for 40 years, and let's say you give them $10,000. After 8% for 40 years, only one time, you're going to have $217,000 from 10,000. So in your head, you're like, damn, I killed it. You're never going to look at what the actual ROI is because nobody calculates that. They can't even calculate it. All you're going to sit there and say is, hey, I gave this guy 10 grand 40 years ago, now I have 217.
Sounds like a great deal.
Now, let me show you how much that really does cost you. If you just put in an ETF, like that one I told you, you're going to make, the difference is double your money.
Come on.
That's my point, folks.
Come on.
Of course. So the ETF, and all you're going to do with the ETF is just wait and wait and wait. You're giving away half your money for what? For a mutual fund manager. By the way, this is assuming they match the market, and they're not going to match the market. If they even lose by 2%, on top of that, you're making 6% instead of 8%. So just by buying the ETF on SPY, you're going to have double the money 40 years later. Now, when you add in all the money you're going to add every single year, we're talking about millions of dollars in difference. All for what? What's the reason for it? I love ETFs for exactly that reason. It's going to save you so much money. As long as you have the discipline, just put money in every single month and not worry about it, you're going to pay very little in fees. Look at this fee structure, guys. 0.09%. This is insanely low. That's the whole point of it. And look how big it is. $320 billion in assets. That's the point. You're going into a very, very big basically a mutual fund, but they're taking the thinking out of everything.
Why does the size matter, Giggity?
Well, you want to make sure it's not too small of a size where you can't get out of it or if it goes to...
You have that problem. David Spicer says not all mutual funds are actively managed. Vanguard, for example, has many passive funds.
Time out.
Go on.
You're right, and I am excluding I treat an ETF like I said before, a sector or if it has a specific systematic way of following a certain investment that has very low funds. You're right, and I love Vanguard, by the way. The ones I'm going to suggest today are, I think you should look at SPDR ETFs and Vanguard ETFs. They're the biggest, they're the best, and they're low cost.
You're afraid of spiders, dreadfully afraid.
Dreadfully afraid of spiders. Although in Mexico once, I gave a multimillionaire friend of mine $1,000 to swallow a spider this big, and he did.
He did, $1,000?
Yeah, $1,000.
You love random challenges like this for
I couldn't believe
massive
it.
Amount of
by
money.
the way, he put it in his mouth, swallowed the water, and it popped back out. He had to swallow it again.
How?
He didn't want the money either. I'm like, take the money. He's like, then give it to the staff. I gave it right to the staff. We gave $1,000 to the staff.
How nice of you.
Prajesh, oh, not for me. It was for him.
Prajesh, one of our patrons, asked, is there a site or book that you like on ETFs?
I don't think Prajesh is a patron, is he?
Oh, yeah, I think maybe. I love you, Prajesh. Is there a site or book that you like to study these ETFs or get more information on besides
here's the deal.
Uncle Paul? Go ahead, Paul.
Here is a website that I found a while back. This is the biggest ETFs, etfdb.com. It's etfdatabase.com, etfdb. This one will give you a list of 100 ETFs here. You can look at this. You can do gold. You can do shorting ETFs. You can do all these things. You can do the triple Q, which is the NASDAQ. You can do Vanguard S&P.
This is the website you love? etfdb.com?
I just go here to look at all the ETFs I want to find.
How nice.
Yes. Go do your research on them. Mid cap, small cap, information technology, international, small cap, S&P 500 growth, high dividend yield, iShares Gold Trust. All of these are ETFs that have bonds, Russell 1000, US large cap.
My 10-year-old just asked if Don can put that link in the chat, by the way.
Yeah, I was going to actually, I'll put it in the chat right now.
No, Don has it. He's great.
Oh, he did it already?
Yeah, we have tons of questions coming in.
I'll put that exact link in there.
We have a couple new patrons. Zubin, welcome, and if I don't get to you guys, Johnny, welcome. We have a Patreon only video going on tonight, a live stream with Paul and I in Trader Mo at 7:30 p.m. Eastern. Paul, you were on fire today. You get so fired about ETFs. Again, going back, we talk a lot about stocks. We talk a lot about companies that are potentially undervalued and overachieving, perhaps.
Yeah,
But really, ETFs is the idea of just like the turtle versus the hare. This is the slow, steady, set it and forget it, sleep better at night type investment.
And you will do better.
Tell us why.
You will do better than giving your money to a financial planner. Trust me on this one. I have financial planner friends of mine. They'll argue to the day they die that they outperform. But the second I ask them for performance between bull and bear markets and not just the bull market, I don't hear anything.
Say
I'll
that again,
get that
Paul.
to you.
Say that again, Paul.
When you're looking at a financial manager, don't ask, how have you done the last 5 years? Don't ask, how have you done the last 10 years? Ask, show me what you've done from the last bear market to today, or from a full market cycle of a bear and bull. Because you want to see how they did during good times and bad times. If they can't show, and then they'll sit there and say, well, everybody is different. Exactly. Since everybody's different, don't waste your money with them. Just follow the ETFs. Just invest in the ETFs and you will do wonderful. If I wasn't an active manager of money, I would do ETFs. 100% I would do it. In fact, that's what I did before. When I had cash laying around, I didn't know what to buy. I was buying ETFs. I love ETFs. There's a guy by the name of Warren Buffett. Have you heard of him?
Jimmy Buffett?
Warren Buffett, his cousin. Just kidding, it's not his cousin.
Go on.
He always talks about buying ETFs. And he's actually a big proponent of the money management business. He says to people, if I were to enter a business today, it'd be the money management business. But in a little different respect. Only buy ETFs. Do not waste your time with funds. Stop wasting your time and money with IPOs, guys. You are not going to do well over long periods of time buying IPOs.
You may do well with a NEO or a Tesla over a short amount of time.
Over long periods of time, you will not do well with IPOs. Guys, you're not the genius that's going to figure it all out. I'm not the genius that's figured it all out. That's my point. I can't beat that system. So I sit there and say, let me do it in my own way that makes sense to me. I was telling somebody yesterday, I'm not even getting that conversation. The bottom line is, do not waste your money with a financial planner with mutual funds. You're not going to get, the juice won't be worth the squeeze. Trust me on this one. Mutual funds are a business. Do you know how they operate? Mutual fund companies will start 10 mutual funds, small ones. They'll see which 2 or 3 did really well. They'll get rid of the other ones and go sell the 2 or 3 with good performance. And guess what? If you go look at history, mutual funds that do well one year, there's no correlation of future years' performance. Mm-hmm. So you have to sit there and go, why am I doing this? Now, in the last 10 years, I'm sure a lot of mutual funds have done well. Why? Because everybody's done well. Everybody's done very well. And the other thing is, guys, they have to match, their goal is to try to match the market because they don't want to be fired. They'll sit there and do manipulations at the end of the quarter so that their quarter filings show Amazon's up a ton. Let me go buy some Amazon. That way, if we don't perform, we can show people, hey, we had Amazon. It's a manipulation at the very end of the quarter. And I'm not being cynical here. I have friends in the mutual fund business who say this. We have a friend of ours, I won't mention who it is, but we have a friend of ours who works at a fund right now, and he jokes and says, every investor claims they're long-term oriented, but we go for quarter-to-quarter performance because we have to. He's like, we're paid to basically match the market. Mm-hmm. Okay, great. That's the way it is.
So why pay them?
So why pay them? Pay yourself. Mm-hmm. Pay your Uncle Paul. Give me money. No, I'm just kidding around. Don't do that. We should start an ETF.
But you can do that for the Patreon. If you go to patreon.com/everythingmoney, the link will be in the comments, of course, below, and our link is down below.
I'm getting very excited about our app. The app is going to be awesome. Because I decided to do the app still, but the website's going to be the more thorough website. But the app will give you all the 8 pillars, exactly every stock, and I want it to give me, if you give it 20 stocks, it'll tell you overall how do these 20 stocks look together. It'll also give you the key stats for the company, but looking at financial statements on the app will be very difficult. So for those of you who want to do that, you'll have to go to the website. But the app and website will be in the same package. You don't have to pay extra for either one, whatever you're buying. All our Patreon users, as long as you're a Patreon user, you'll get the app and the website for free. And the website will be ready in the next 3 or 4 months.
Very good, Paul. As always, make sure you guys are tickling the like button down there, that little thumbs up. We appreciate it. Paul, why don't we get into some ETFs that we've been talking about for a while off our Patreon line? People want to look at jets.
Well, I want to answer a question.
Oh, go ahead, Paul.
Daniel asked the question. Can somebody put Daniel's question up?
Go ahead.
Daniel's asking me, why am I short the market? I'm short the market. I do not recommend anybody short. And I think that's what he's kind of asking. I'm short the market because I can afford to be short the market. I barely made any money in the stock market in the last 4 or 5 years. Very little. I've underperformed the market by double digits. I'm okay. I hate to brag. It's not saying a brag. It's just saying I can be wrong because I have real estate, I have businesses, and I have a lot of money sitting aside. I will not have my life affected because I missed 4 or 5 years. Even if the market never goes down from here and becomes worth today's value, I'll still make plenty of money for my lifetime. I'm short the market because I saw how this is where the market goes, and and over time, it's like this, and then now we're here. And I'm looking at going, this gap always ends up poorly. The level we're at in terms of the values of the market and the behavior of the market are the worst in history, worse than the Great Depression, worse than 2000. And 2000 was bad. When I see people right and left saying 10x your money guaranteed. IPO yesterday, DoorDash, up 90%. It reminds me exactly of 2000. It was literally like stocks were going up 100, 200, 300% on their IPO days. That's why I'm short the market. I can afford to be short the market because I'm not trying to save for retirement. I can be wrong in all my stock picks the rest of my life, and I still have businesses and real estate and money on the side. I won't need it. That's a very fortunate position I'm in. So I can afford to take those risks. But you cannot. You are trying to get to retirement. And in retirement, you cannot guess the market. There's a saying it's time in the market, not timing the market. What matters most is time in the market. How much time do you spend in the market? You should always be in the market. Don't try to test things. Don't try to time things. Just buy your ETFs every single month. Large cap, mid cap, small cap, some technology, whatever tickles your fancy. And just do it every single month, month in, month out, and don't even think about it. Then take 5 or 10% of your portfolio and try to guess on stocks like Uncle Paul does.
That's how it's fun a little bit.
It is fun. It's a lot of fun. And I'm not telling you don't do it. Just don't do it with all of your portfolio. Do it with a portion.
Folks, if you're a first-time watcher of the show, we definitely welcome you. We thank you for your follow. We thank our new patrons. It's been an incredible ride for Paul and I over the past 2 years. Paul, I just sit here and marvel. I'm not kidding, man. I know you don't like praise, but folks, if you're watching, I'm kind of like a viewer like you. Like I'm just sitting here. One of our associate producers, Nate, is a 20-year-old kid working the camera. And I'm learning as much as you are. And versus some people on YouTube, Paul, they literally stumble over each sentence of horse crap they're saying. You sure as hell sound like you know what the hell you're talking about.
Somebody asked me today if I should debate Stock Mo. And I said, listen, Stock Mo will always believe what he believes. I will always believe what I believe. I believe in the numbers. I believe over a long period of time, the numbers will dictate returns. That's just the way I believe it. There's no convincing. It's just like religion. It's just like everything else in the world. If you adamantly believe that Jesus Christ died on the cross for you, I cannot show you I could have literally Jesus Christ coming down to you and saying that did not happen and you would not believe it. So why even get in the argument? Our old Paul would have gotten the argument before. I will defend my views, but I don't want to debate anybody because at the end of the day, there are multiple ways to skin a cat. I used to never believe in day trading. Now I'm getting into trading, right? So our views change. I just know for me to sleep comfortably at night, I like understanding cash flow. That's it. We had a call today with our investment mentor, Gary, and I didn't agree with him on something. And I told Mo, I'm like, Mo and I have ended the call. I'm like, yeah, I don't agree. He made very logical points. I'm like, I think I can do it a little bit different. And by the way, did you get the email? He just emailed us. Yeah, so it's just like, okay, but he's a brilliant guy. But I think if you think I'm conservative, you should meet this guy. This guy's, I said before, he talks to executive teams, former employees, former customers, and current customers before he buys a company.
That's a lot to go into it.
What was that?
That's a lot to go into just
By the
buying
way,
stocks.
I want to plug him. Gary Proshares. Go look at his YouTube channel. He's got a lot of great videos. They're a little dry, but they've got a lot of great videos. Gary Proshares. Mishuris. Check him out. Very thorough guy. I love him.
Paul, let's get into this. What are some ETFs you want to talk about? I brought up jets. It's a big topic.
All right, let's look at jets.
Yeah,
when you're a jet, you're a jet.
How do you analyze this? Do you analyze this along the same pillars?
No.
Okay,
so here's the deal with jets, guys. I like ETFs for a reason. If you want to play a certain sector industry that's been hit very hard, ETFs are the way to go, and here's why. Why guess which airline will do well? If you believe airlines in general have taken a big crash, what they have, I mean, look at this chart right here, guys. Look at this. Massive fall here, right? If you believe at this point that happened, then instead of trying to guess which airline is going to do well, bet the sector. When the NASDAQ 100 plummets, whatever percentage is going to plummet, 60, 70% at some point, I think, go bet the sector. Say, listen, I think this is over-exaggerated, whatever it is. I like ETFs for that reason. Use ETFs as your way of making bets on industries and sectors. That's a fun way to make some money. Or do your own. I mean, look at the holdings here. This is Y charts. And one of the things, I don't know if this is going to be part of our Everything Money app or website, but this is going to show me all of the biggest listings of each one. United Airlines, the largest, ironically, Love is the one I love.
No pun intended.
And it was, it's 9%. I like the stuff. And by the way, you don't need this. You don't need Y charts. Go to I'm sure the ETF database has the information on what the holdings are, et cetera, all for free. Information on the internet is so free, it's ridiculous. So these are the things I like doing. So let's pick another one. What's another kind of sector we want to do?
How about SCHD, Schwab US Dividend Equity? How long is the holding process for some of these, Paul?
I mean, listen, I'm a big believer in buy your ETFs and hold on to them forever. Especially from a company like Schwab, Spider ETFs, or Vanguard, they ain't going anywhere. Why even bother selling them? If you believe in the investment philosophy, go do it. Now look at this one. This one, the Schwab high. So the investment seeks to track as closely as possible before fees and expenses the total return of the Dow Jones 100 index. The fund invests 90% of its assets in the stocks included, blah, blah. So basically they're looking for a dividend. So look at the dividend yield right now. I'm going to go down further. That way I can get it. Dividend yield, 2.94. I think the current stock market's 1.6% of the S&P or so. Somebody wants to verify that. So it's a good chunk higher than this one, almost double. And dividend-paying stocks tend to do pretty well.
One of our patrons, David, says he has 15% of his portfolio in this exact fund.
Oh.
Tell me why I'm wasting my money on it.
I'm not saying you're wasting your money on it. I don't know. I mean, we can look at the if you guys want to look at the performance, we can do that. We can compare it to the S&P 500 right here. So let's do this. Let's do the date would be.
Make sure, as always, you guys are hitting that thumbs up. I would say, Paul, 70 some odd people and only 50 thumbs up, guys. Please give us a little tickle for a little love. Paul needs his likes like a 7th grade girl. He looks at this all day. Make sure he gets his likes in. So
this one has underperformed the market by a good chunk. The S&P has done 30% growth. Sorry, it's tripled from 10,000 since 2013. This one's gone up 2.2 times. Now, dividend-paying stocks have been the boring ones that haven't done well. That doesn't mean that's going to happen forever. In fact, I'd make the argument that this will invert at some point. So dividend, you got to remember, don't just look at the time in a bull market. 2013 and now has just been a bull market. And the biggest drivers of the S&P have been Netflix, Amazon, Microsoft, all these big companies that don't pay dividends. So you're going to get hurt by being in a company like this, in an ETF like this. Okay, it's up to you. I'm okay with that. Like, to me, I don't have FOMO. I sit there and go, okay, I've gotten probably a pretty secure investment here, and I'm willing to bet this drop probably wasn't as bad as this drop, percentage-wise.
So, coming from a complete dummy as always, Paul, is like, what is the reason, again, go over the reason why this ETF in particular is behind the market.
I just said that.
Well, so right off the bat, you're sort of coaching why ETFs are great. Why is this one in particular not doing so well?
Because this one's dividend-paying stocks. Dividend-paying stocks tend to not have the big run-ups that what's driven the S&P? It's been Apple, Microsoft, Amazon, Netflix. I almost said Tesla, but it's not. Facebook, Google. These are companies that have not been paying dividends, that aren't paying big dividends. I think Microsoft pays like 1%, and Apple pays like what do they even pay? Let's look at this right now. So Microsoft right now pays a 1% dividend. That's probably not included in that ETF. Apple pays 0.67. That's not a high dividend company. I mean, that's not a high dividend portfolio. They're not going to include that in there. What was the name of the ETF again?
SCHD.
Okay, let's look at the holdings. Which one of these stocks have been high flyers in the last 10 years?
Oh, I see. Not many.
3M, UPS, Coca-Cola, Pepsi, ExxonMobil, Pfizer, Texas Instruments, BlackRock, Qualcomm. None of these have been high flyers. So I look at it going, damn, that's not bad. They've done 10,000 became 22.7, 127% return, 122.7% return in 7 years by doing what? By buying dividends? This is great. I look at it as a positive. I'm not opposed to this. But you got to be okay being down that much to the S&P because all the high-flying stocks are the S&P stocks. Let's look at more companies by them. Oh, look at this. IBM, Verizon, US Bank, Altria, Emerson, Eaton, Kimberly-Clark, Cummins. You haven't even seen a Microsoft or none of the big ones yet. And that's the point, guys. I think in the next downturn, the most high-flying stocks, history has shown the most high-flying stocks are the ones that get hurt the most.
Is it? So you say I think? Is it an opinion or is it?
150 years, over 150 years, every single time there's been a big bubble, the biggest gainers of those bubbles get hurt the most. They drop more than the bubble pops. So if the bubble pops in half, they tend to drop way more than that.
You want to look at another one? How about ITA? This is U.S. Aerospace and Defense. This is from one of our patrons, Nick L. Love you, Nick.
Like Nick Lavamore?
Yeah.
Yeah, he works for a Dynasty Owner. He's great. Now this one has a little bit higher expense ratio. I don't know why that is. But if you look right here, their expense ratio is 0.42. Dividends about the market, 1.69. Holdings. Okay, these are all like, as you can tell, Raytheon, Lockheed Martin, Boeing, Teledyne. I don't even know who this one is. General Dynamics, don't know them. Textron, don't know them. So I look at this stuff saying it's, if you want, this is the great news, guys. Oh, this will be great. With the Everything Money app, you can open up an ETF. Not with the app. Go to a website, find all the holdings, and put the holdings in the app, and it'll tell you overall for that ETF, green, red, whatever. It'll tell you overall where everything stands in terms of the 8 pillars. So you'll be able to do an entire ETF in 8 pillars, but you'll have to input the holdings yourself.
Can you show which ones you love, Paul? I'm giving you some off the request line. Which
Okay.
ones are you in love with?
Vanguard, mid-cap, VO. I like Vanguard mid-cap. Look at this expense ratio. Now, we all know this. We are going to look at this. There are 3 types of large cap companies, and I don't remember the exact numbers. Hey, Mo, can you look that up? What differentiates these? Like in terms of market cap? Large cap, mid cap, small cap. These are 3 areas. Small cap, over time, has beaten the market. Why? They're smaller companies. Smaller companies tend to have much more upside potential. They're going to grow a lot faster than other ones. The next level would be mid-cap. Mid-cap is smaller than large cap, so they should do, these are, by the way, these companies are also not followed as much as large cap and mid-cap. So when they're not followed as much, there's more opportunity for mispricing. So these will tend to do better because they're ignored and they have more upside potential. What's more likely to happen? A $500 million company becoming $5 billion, or a $100 billion company becoming $1 trillion? Which one's more likely?
The small.
Correct. So that's the idea here.
David Spicer says small caps usually less than 2 billion, mid caps 2 to 10, and large is over 10 billion.
Thank you. That's what he's saying. I don't know that exact number, but if he's saying that, that's great.
2 to 10.
2 to 10 and 10 billion plus. Okay. Mid cap, same idea. Small cap, but just not as good as small cap. Large cap. And by the way, guys, I tend to focus on these. I tend to focus on large and mid, and here's why. I want, when markets fall, people are going to punish these the most. So I want to buy really, really, really good companies, big companies at discount prices, ones that I know are going to be around for a long time. These ones, you got to do a lot of research on. I'm not opposed to them, and I will make some plays on some of them, but this one, you're going to do a lot more research on. These 2, this is my personal opinion. I'm not saying you should do this. I like to focus on this. In fact, my investing mentor, Gary, disagrees with me on this. He focuses on micros, basically. I mean, he does other ones too. Like he has other stocks that are big, but he likes small companies. Like he has companies where there's $20 million market cap, 20 million, not billion. So it's all depending on what your philosophy is, what makes you comfortable. But he also has beaten the market by 6% a year over a 15-year period of time. That's a huge number beat because he's doing these small companies. Last month, he was up 40%. 40% last month.
Will you show us some small cap ETFs? I mean, go back to the ones I think that's the bread and butter of this episode. Paul, you have to erase your
Why don't you erase it?
Erase your screen.
I will.
But I think people want to know what you're in love with, and they want to sort of look into that and follow that, of course.
Great. Mid cap. This is a small cap. Vanguard Small-Cap ETF, VB. Oh, whoops. So let's look at some of the holdings here. I mean, but look how many companies they have. Their biggest holding is only 0.4%. Look at all these holdings. Have you heard of any of these? I think we saw Teradyne in the last one.
HubSpot and Etsy. That's
Oh,
interesting.
there you go. Where's Etsy?
Up a little bit.
Oh, look at that. It's up a ton, though. So it's probably Teledyne. There you go. Booz Allen. Okay, I know Booz Allen.
So maybe as a new investor, Paul, let me act confused why you're telling me that I want to go after a bunch of companies I've never heard of as opposed to all the companies that everyone else is talking about.
Just potential. Like I said to you, small cap companies are more likely to do really well. So instead of guessing what small cap companies are, find an ETF that just does it for you. Why even waste your time? My personal opinion is I'd put 50, 30, like 10 and 10. 50% in large cap, maybe 25 then. 25 in mid cap, 15 in small cap, and 10% in your own, fund money. Something like that. I'm not saying that's the right thing to do, but diversify, match your market there, get a little bit better here in mid cap, and get even better in small cap over long periods of time. Over long periods of time, right? So that's the whole key. So let's look at this. Let's look at this small cap one. Actually, let's see the performance here. Let's see if it's even beating the market. Oh, I don't know how to read this. F this. Hang on a second. I didn't curse.
F this. You guys are doing great. Make sure you smash that like button. We appreciate it. If you.
Oh, this one's actually trailed since this small cap has trailed since 04. That's interesting.
Why is that?
I don't know. By the way, I look at this going. Look when it started to deviate, really big time. Oh, look at this. This is when it started to deviate. When I started leaving the market when it was overpriced. And what happened right around here? What started to surge?
2017 housing.
What started to surge? No, those big Amazon, Google. I mean, all these big companies. That's the hard part, guys. You're going to look at this and think, oh, it hasn't outperformed. I look at this and think, okay, this is good. I am still surprised it was even at this point. I am still surprised by that. I am surprised by that. But either way, I look at it going, okay, maybe there's a better ETF out there that has a better strategy on small caps. I have no idea. Or maybe just do all large caps. The whole point is, you need to, if you want to make I like the idea of making a bet on a sector too. If you think airlines are down a lot, go buy the jet. Don't buy individual airlines. You won't make as much money, but like look at jets, for example. I bought Love at 25 and sold at 47. That was, and it didn't double in that time. When did we buy Love, Mo?
March or April?
I think it was like April or May. So we bought around. I remember. Oh, wait a second. I bought it.
We were still at home.
When was? Oh, we were.
Yeah.
So in that time, I outperformed by buying Love versus Jets. But you still would have done great. You probably still would have made 60%, 50% of your money anyhow by buying Jets.
Are you still in love with buying jets right now?
I'm in love.
Go on.
I will never, ever, 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 ever
Go on.
buy this as a long-term strategy. Or if you're going to have it as part of your 10% you're making a guess on, do that. Jets, could it be undervalued, overvalued right now? I think that a lot of stock, like I thought Love was worth $50 to $60 a share, and it got to 47 or 48. I got lucky and got called the shares away at 47. So I was out at 47. I think now it's like 45. I just got lucky on that one. That wasn't on purpose. Yeah, I mean, I got lucky, but pick your strategy and stick to it. If you're going to take 10% of your money and make bets on individual sectors and industry, more power to you. Go do it with individual stocks in some, but also on sectors with others.
It sounds like from the comments they want our followers want to get their strategy from you, Paul.
Well, that's not going to happen.
In terms of picking their strategy, if you told me to pick my strategy, I would ask you, what strategy should I go down, Paul?
Then go buy your large, mid, and small cap ETF and ride it for the end of time. And pick 10% of your money to just do whatever you want with.
You want to pull up another one of your favorites?
Those are the three favorites.
Oh,
let's do QQQ.
okay.
This is NASDAQ. Now this one's crushed, but I like NASDAQ in terms of the excitement of it, but look how much this is up. I mean, this thing is insane.
Paul, do you trade these stocks or
Nope.
mutual funds? Some of the spreads are rather high.
Some of the spreads.
That's what someone said. Maybe the separation.
Options, you mean?
No, some of the separations. Oh,
Well,
maybe
yeah, the
it's-
separations are all towards the end, though, guys. When these come, look at QQQ right here, guys. QQQ is up from 100 from even beginning of this year. It's up almost 50%. The Nasdaq's up like 40% over 40% this year alone. Are you kidding me? This is insane. This is absolutely insane. The Nasdaq 100 is up over 40% this year alone.
Why is that insane?
To be up over 40% in 1 year when we had a massive plague and economic collapse. Did you really? Who wants to be a new host for the show?
I'm
taking applications
listen,
now.
I'm asking these questions that a viewer might. I don't actually. I know why it is, Paul. I'm just asking these questions what our viewers might be thinking, because it might not be very clear. If we're all making money and everyone's having a great time, why is it insane?
By the way, IPO of Airbnb was at 60. Then it got to 158. What's it at now?
Opened at 60.
Open at 60.
Paul, let's get back at it here.
Well, I don't think it can pop up on Y charts, can it? I don't know if it's even up on here yet. Air B. Oh, there it is. It's up to 146 now.
Paul,
Hasn't even gone live yet. That's the funny part. This is still, it hasn't even got, it's still it's still, yeah. So guys, this is the .com days again. It'll end poorly. Just trust me on this one. It'll end poorly. But if you're gonna be the genius that figures it out, more power to you. Or just buy your ETFs and wait with your 10% in cash and be ready, and don't worry about your ETFs falling. They will fall. That's okay. Your goal is retirement. If you have over 20 years to retirement, don't worry about it. If you have 10 years, worry about it. The next 10 years are not gonna be pretty.
really?
The next 12 years. I would make a bet with anybody who wants to make a bet with me right now that the S&P will be lower 10 or 12 years from now than it is today. I'd put my money where my mouth is on that one. I have a few bets on that one.
We have a couple more ETFs we'd like to look at, Paul.
Okay, let's hear
what
it.
about another Aerospace and Defense XAR? Nick is asking, can we kind of look in between, ITA and XAR? XAR. Tell me about this.
Okay, this is 0.35 expense ratio. I don't know why. That's actually kind of high for an ETF. 0.64% dividend yield. They just invest in the aerospace. We're doing something that we just already did, but a different ETF for it.
Mm-hmm. Well, in comparison,
Guys, you know what this is like buying? Ford versus Chevy. Which one do you want? That's all you're doing here. Ford versus Chevy.
Mm-hmm.
I'm sorry I'm getting annoyed, but it's Ford versus Chevy. Do you want Spider? Do you want Vanguard? Whatever you want, Schwab, it doesn't matter. They're all going to have very similar. If they're in the aerospace industry, they're buying all the same aerospace companies. That's it.
What about XOP? This is oil and gas.
I knew that was going to be happening, so do it.
Why is
Now,
that?
I think XOP, I think an oil and gas one is what you do, like gold also. Do it for a short-term play. I don't like oil and gas long-term because the prices fluctuate too much. Although it's probably pretty, oh yeah, look at how low it is right now. I mean, look at this, guys. You know, my good friend Michael believes that oil and gas energy won't go down this much forever. He's like, Paul, these companies aren't going on. Actually, this is actually not a bad idea.
Not a bad idea to
make this play and wait 3 or 4 years, and hopefully oil and gas prices rebound. I mean, look at this. This is down from 333 peak to 63. It's down 80% in the last 5 years. Maybe it's something to play. I don't know. It's just the company. I think that's actually the company, isn't it?
Someone was asking what this Spider is. Yeah, I'm sorry.
Spider ETFs.
Spider ETFs, interesting. Your chess coach, Matt, said, wait, which one is Ford, though? It's funny.
Well, he's a Ford guy. That's probably why. Yeah, Spider funds are a family of exchange-traded funds traded in the United States, Europe, and Asia, managed by State Street Global Advisors. I wonder how much they have total AUM. Let's see here. $832 billion across 141 ETFs. Bless you. The average expense ratio is 0.28% versus 1%. At least 1% for the mutual fund.
How about XME, which is
Are we just going to do this over and over? Just go through the exact same thing. I'll say the exact same thing over and over.
Well, that's why I'm asking. What I mean, people want to know.
Guys, the whole idea of talking about ETFs was to say, pick a strategy. If you're making a play in a certain sector or industry, find a low-cost ETF that takes advantage of that. If it's gold and metals, do this one. If it's petroleum, do XOM. Do something like that. That's the whole point. So if you ever hear me talking on here where I'm like, man, this sector is really down a lot for some crazy, like travel. Back in March and April, travel is down I bet you there's a travel one that's not even jets. It's like a travel ETF. Mm-hmm. What's a travel ETF? Can somebody find one for me?
I guess the question is, are there, obviously there's better ones than other ones. I think that's what people want to know.
I already answered. Spider, Charles Schwab, and Vanguard. Guys, the whole point of an ETF is they follow a sector or an index. If you buy the S&P 500 sector in Vanguard, guess what you're getting on Charles Schwab? Who wants to guess? Nate, you want to guess? You're getting exactly the same. You're getting the exact same S&P 500 thing.
Okay.
It's just you're picking Ford versus Chevy. They both have wheels. They both have tires. They're both going to get you. They're going to get you 15 miles per gallon. Blah 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 blah. Which one do you want? That's it.
Okay.
I am getting annoyed now, and I shouldn't say that. So that's probably going to lecture me later on it.
Probably.
Guys, I want you guys to realize I'm not here to run your life. I'm here to advise. If you want me to give you exact do this, do that, I'm not going to take that liability. If you want to see what I'm doing, join the Patreon, pay $100 a month. You'll see exactly what I'm doing. I engage everybody.
You literally write down in the Discord
literally, Mo and
what
I
you're
talk about our
trading
investment ideas and everything and what trades I make and what investments I buy.
That's true.
That's it. I'm not going to sit here and tell you that would be irresponsible of me to give you financial advice without knowing your age, your income, your net worth, your spending, any inheritance. There's so many factors out there. I have no idea. I have no clue in the world. If you're 65 years old and want to retire tomorrow, I'd say you need to go to 100% cash. That's it. I'd be like, go to 100% cash.
Can you do puts and calls on ETFs?
Yes, you can. Great question.
Someone asked, can you do puts and calls on ETFs?
Yes, you can do puts and calls in ETF. They don't pay as much, but there's also less volatility, which means it's less likely that you get put or called the stock.
Yes,
the
Jose.
ETF.
So yeah, covered call ETFs, Jose.
Yep.
Benjamin was saying, do you have a general thought process on the percentage you should be putting in your ETF?
I think the vast majority of your money should be in ETFs.
Vast majority.
How much you change, or just that's all personal preference. I had suggested 50% large cap, 25% mid cap, 15%, or let's go 10% small cap. Now 15% small. I don't. That's what I'm saying, guys. Look what I'm doing right now. I don't even know. Maybe we do 30% here, 20% here, and 10% of your own money. Large, mid, small, and your own guesses. I don't know.
What about some of the younger viewers? We have people who are 10 through 19 through mid 20s. Would you ever let them take a chance on a? Sorry, I know the answer. Like the Teslas, the Neos, the hype stocks. I mean, you're saying it's not needed, right?
Save a portion of your money for your big risk and speculation. The vast majority of your money needs to go into your retirement. If you're 10, 15, 20 years old, you have so much time on your hands. You're going to make way more money doing that. Trust me when I say this. You're not going to become a millionaire from Tesla. You're just not going to.
Well, I almost did, Paul.
You would have never sold. You'd have lost all that money.
But I did sell. What?
Of course you sold. That's my point. But
You
if you
just
don't
said I would have
sell-
never sold.
That's the point. If you don't sell, you would have never sold. It took selling to actually sell. I know that doesn't make sense, but if you know what that's like saying? You're going to be the first person out of the room when somebody yells fire. I'm going to be the first person out of the room. Well, why? But Paul, I already left the room because I see a fire coming. Okay, great. You left the room already. That's why you're not going to get stuck. If you're the one sitting there saying, I see a fire coming, but I'm going to get out of that room before that fire hits us,
Yes.
you're never going to get out of the room. But if you're like, shit, there's a fire coming down the hall, I'm going to leave right now, even though people are having orgies and having lots of sex and banging, Playboy models, great. And then all of a sudden you're going to be mid-thrust and the fire's going to come and you're going to die.
What? I don't even know where to go with this. What we're talking about is I had 140 shares of Tesla that I bought sub 300 back in the old days.
So $60. Yeah, you lost a lot of money.
Yeah, and so
and you're gonna look back on it and say, no, I didn't. At some point, and
Really?
you keep saying, but I did sell, and that's a perfect analogy.
Well, I
The
just- I don't
fire's
understand, I guess,
The fire's coming. You're doing everything fun in this room. You're like, I'm going to beat the fire, though. I still want to keep
Yes.
having fun. And guess what's going to happen? Everybody, when the fire finally comes, nobody's going to get out. Or very few people are going to get out.
Not to get morbid, but I do see news on the news where people get caught in fires. And I'm like, I don't understand how you get caught in a fire. Like,
Well, that guy, I think I know who you're talking about.
no. Every single day, someone dies in fires, and
yeah,
I'm
I
always
know,
like,
but-
man, how does that? Maybe I'm missing.
Well, they're probably sleeping and they don't catch it.
I guess that's the point. That there it is in me thinking, well, I could just get out of a fire in my
I
house,
shouldn't even think
right?
about that. You're right. You can't even get out of a real fire. These people can't get. You're not going to get out of this one. You're not going to get out of this one. Trust me. I've seen it 1,000 times. What ends up happening later is the people who are in your position end up suing everybody. You lied to me. You lied to me. No, you're stupid. That's why you're suing now. I've seen it so many times.
Well, stupid and uninformed is a line in the sand. I think that
But if you're uninformed, you should stay out. So the second you put your money in there, you're stupid.
Oh, thank you for explaining that. Of course.
Yes.
Okay.
Sam's going to lecture me hard to later. Guys, ask me good questions. There's always good questions.
Matt Jensen's asking about VXUS.
VXUS by Matt Jensen. What the heck is VXUS? Do I have to yell at Matt now? Vanguard Total International Stock. If you want international stocks, buy it. Next. It's an international ETF. It does international stocks. Next. Hey guys, guess what? There's probably a marijuana ETF. Buy that one. Hey, there's probably a gaming one. Buy that one. Anybody else? Shoes? Buy that one. I don't care. Buy whatever ETF you want. The point is, it's just an ETF. Do whatever you want.
Who got him, Mo? Who got him? How did we get to this place where he's just screaming and just?
Oh my God. I thought guys are asking me to do you want me to change your entire life? Jesus Christ. Join the Patreon, spend $100, talk to me. Oh my Lord.
So yesterday you were going to talk about Dash.
Oh.
We didn't get to it at 4 o'clock. So do you want
Oh, what's DoorDash doing right now?
Yeah, Don's asking about Dash hair.
Okay, it's down 6% today. So Dash went up. What was it up yesterday? At some point, it was like, why are you laughing?
People are saying, people.
Did I just lose all my subscribers?
Yes, I can see they're going. Yes, you did. Tonight's Patreon only fired up. You are especially fired up today. So.
Mason said old Paul is back.
Yeah,
Paul, hi.
they're seeing the beads of sweat dripping down.
Z Survival, can you please take a look at D's?
So what are you looking up now?
Didn't we talk about Dash? DoorDash is up a ton. Yesterday it hit a peak of 195, and now it's down to 176. I don't think they even make I can't even find their financials yet. Like, I don't have the financials here on, oh yeah, here we go. That's 2019. We don't have the quarterly data. I mean, they only lost $600 million last year, and they're worth, right now, they're worth 56 billion bucks.
Yeah, Airbnb at 156 already.
Well, I'm wrong again, I guess. And I don't mean that to be funny. I mean that to be serious. Like, it's just, guys, it's tough because I look wrong and stupid and all this stuff, and I just look at it and say, okay, I'm not the one buying $100 billion companies that generate $1 billion in revenue and lose money. I don't know how to explain it any other way.
What a lunatic you are.
Yeah, I mean, let's look at Airbnb's last year's numbers. And I think they did better this year because of the whole shutdown. That's why they went public.
My brother-in-law said you need to switch back to shorts to sort of get some airflow through your pants and girthy areas. Do you have shorts on too? Oh, Paul, don't do it. No, you have a mic in your pocket. Stop
I will get it. Don't worry. He's right.
You're
Which brother-in-law is this? Braden?
This is Braden, yeah.
Hey, what's up, Braden?
Yeah. Oh, there's the shorts. Okay, they're back, folks. Get a wide shot
breathe.
on this, Nate. There.
I can breathe.
There. Now he's, I can feel the heat coming off his undercarriage.
My head hurts.
Yeah, you're just screaming at the followers.
You guys, I'm not trying to be a jerk. I'm just sitting there saying, like, you guys are literally asking me, Paul, should I buy this ETF? I'm explaining what ETFs are.
Uh-huh.
What was that? ETFs are, anybody have any single moms out there? ETFs are meant to do pretty much what the market does or what the sector does. Whatever sector you want, make your plays. I don't care what it is. You guys are asking me should I buy Vanguard or Spider or Schwab? I don't care. Just don't pick some fly-by-night company. That's all I'm asking you to do.
Airbnb is now a $100 billion company, Paul.
Is it?
I'm sure it is, right?
They did $4.8 billion last year in revenue. They lost $675 million. I wonder how they did this year. Like, the thing is about Y charts, they don't update this thing regularly. What's so funny?
Someone said, I don't know why, but it seems like Paul should be that guy who's teaching whilst walking on a treadmill or a spinning class. I think would be good. You could be riding a bike and screaming at our viewers at the same time.
So we used to do, I haven't done it in a while, cardio chess, where Matt and I do chess while we're doing cardio. That's been pretty good.
I saw some brokers like Webull, Dave says, they allow you to make your own ETF. Is that a good idea? What does that mean?
Well, I don't know what that is, but to me, it's just buying a bunch of stocks yourself and having your portfolio. Like, you have an ETF. I don't know. It's just, you can make your own ETF just by buying the stocks you want.
Oh, yeah. Yeah. So basically,
but how do you buy 500 companies based on market cap? That's going to be too difficult. To even buy one share of each company would be too hard. Mm-hmm. It would cost tens of thousands of dollars.
All right. Corey said, not a good day to show my friends this channel. I agree, Corey. I'll blast Paul for that later after the show. So, all right, Paul, what are you looking at?
I'm going to say this.
Oh,
no, show your friends.
Don't say anything. It's okay.
Just show
you're
your
doing
friends
fine.
because I want the real, authentic Paul. I'm not here to be a fraud. Like, I'm sitting. The reason I'm, and you're going to blast me, and I'm not critical of you guys. I'm more critical of Seth for not taping the questions and saying, hey, listen, there's no ETF itself. I'm sitting there discussing ETFs versus the mutual funds versus all that stuff. Whatever ETF it is, I want to show you the ETFs that I bought. I did that. I want to show you guys the ETFs I've seen and bought. I did that. Then it's like, hey, Paul, would you buy this? What about this Aerospace ETF? What about this one? It's like, but they're both Aerospace ETFs. One is Spider, one is Schwab. I don't care. That's my point. That's what I want you guys to understand. Like, the reason I got frustrated was the whole point of this video was that. And I know he's going to I can see him fuming in there. He's like, this guy's going to get killed. So I just want to make sure that you guys understand that I'm a big proponent of ETFs. Don't try to beat the market. Just match the market and take 10% of your portfolio and try to do the fun things that we do on here together. You'll do very, very well. This link right here will give you 100 biggest ETFs by how much money is in them. Look at how much money is in these ones. You have to add 3 more zeros to this, to each number here, to see how much money is in them. Assets under management. But there are so many here. Healthcare. Financial sector. What's so funny, Mo?
Braden's comment.
What do you say?
Braden just said, what if we just start yelling out sectors? Would that be helpful? Daniel asked, what about a low volatility?
Sorry,
it's spelled wrong, so I'm trying to read a word that's spelled wrong. Like SPHD.
I don't even know what SPHD is. Let's look. SPHD.
Yes, Johnny, join us tonight for the Patreon. We'll see you there. Thanks so much. Enrique, you're correct. This is more of a set it and forget it type investment play, which is, as Paul always says, lets you sleep a little easier at night, not knowing that your stock's going up and down.
So high dividends with low volatility. Look at this dividend yield, guys. That's a huge dividend yield. I mean, I don't know what they want low volatility, so I'm thinking it's these big monster companies that are like boring as hell. 50 companies.
So going back to like, again, the dummy in me is still looking at where the price used to be versus where the price is now. Does that ever play into your thought process?
No, because if you're buying an ETF, you're buying it for the long term, right? You're buying it for the long term. And by the way, can you put specific ones in sectors? I still believe in just large cap, mid cap, and small cap. I don't know why you deviate from that besides making a play on a certain industry. Now, in that case, maybe in this situation, you would look at the changes in price to say what caused like Jets. Jets went from 30 down to 13. You might sit there and go, well, why did it go down almost 70%? Why did it go down 60%? Well, because okay, do I think travel is going away? Maybe not. Maybe I take a play on Jets. The thing I like about these ETFs is if you make a play on Jets, you can dollar cost average because the airline industry is not going away. There will always be airline industry. So I don't see the ETF going to zero. That's the great part. That's the way you make the play on it. You dollar cost average and wait for it to rebound. Go ahead, Peanut.
I'm working on it. One of our fans is saying he's saying stuff and getting unnoticed. There are a lot of comments. And yeah, and then I look back at your comment. This is ZS Survival. He's a funny guy. I look back at his comments and he's saying, yeah, Paul's interested in a single mom ETF. That's true, Paul. You're fine with divorcees for sure. You love them, right?
Well, not necessarily divorcees. It's just, I mean, I don't care if your husband died. I mean, that doesn't matter to me. It's just,
I see.
As long as you're single.
Just MILFs in general.
Yeah,
okay.
MILFs in general.
Okay. I see. Got it. I see. One of our patrons.
Zach.
Yeah, they know the inside. They know that your inside parts there, Paul. Okay.
Well, is he the one that I asked if his mom was single?
European residents are not allowed to invest in American ETFs. You don't happen to know any good European ETFs? No?
I don't. But there's a thing called Google. If you just Google it, I'm sure it'll pop up. By the way, I think that the company was the Spider one was. They have them in Europe too.
Caesar has a phenomenal idea. Just to finish, we'll just cool down, Paul.
No, we're not finishing. We're going longer.
We have some questions about Tesla and NEO. Would you like to go into those? Also, let's bring up religion and anything else. Politics we'll move into next, Paul.
So the best ETF out there is S-Mom. All right?
They're liking you in a cooler state.
Single mom. And there's FC Mom.
Paul, let's move on because my
fake can mom.
Let's move on because there are women watching and young children. Yeah.
Your kids don't know.
Gio is commenting directly. Okay, Paul. This is a great show, guys. We've gone an hour, Paul. Listen, we're going
longer.
We're going another an hour tonight, so don't blow your voice out.
I won't. I'm going to drink lots of water.
Okay, go ahead. Keep going. What are you
going
to talk about?
Let's talk about let's talk about something different. What do we want to talk about? Anyone want to suggest anything?
I got a question.
Go ahead,
Nate the Snake's got something.
Forgive me if you've addressed this already, but what's the connection or comparison between ETFs and something like a Roth IRA?
Oh, you can buy. So the question is ETFs and Roth IRA. Roth IRA is the structure in which you buy it. It's your retirement plan. You can buy ETFs in your retirement plan.
Yeah, so there's different portals and avenues about where and how and limitations on what you can put your money in and tax implications. Thanks, Paul. I'm gonna lose my damn mind. There's different tax, not so much loopholes, but there's just taxes around it. So there's a Roth IRA. There's a 401k. Small business owners have a 403b. So there's just ways to get your money in. Once it's in, you can do whatever you want. You can put your entire life savings into NEO this morning with literally just a couple clicks of a button. But obviously we don't guide you toward that, right, Paul?
Yeah, just buy your ETFs. I wasn't even paying attention. Buy your ETFs in your IRA, your 401k, and then forget about it. And all your gains and all your dividends will be tax-free, or whatever the IRA. One's Roth IRA, one's a regular IRA. One is taxed today and then tax-free in the future, and the other way around. I think you want it as much as possible. The only reason to buy the one where you're taxed today is if you think tax rate will be lower in the future. And significantly lower, but you always want to defer taxes as much as possible. I mean, not always, but for the most part, you want to defer your taxes as long as possible. So do the 401k and do the whichever IRA is the one that is deferred. You get tax deduction today.
I would say, Paul, that Paul can probably work for our European fans. Paul, we have a lot of questions on European ETFs, and maybe you can do some research on that and give your advice on some of that, because some people are asking about them. Some of our patrons as well. Great.
I like gold. Somebody said, Agalo said, do you like gold? Gold today is down. I still think gold was hovering around 1,200 for a long time, so it's up a lot. But I still think I think when markets fall a lot and things go down, it's going to be an asset that has a good potential. I own GDX and GDXJ. So here's an example of me not understanding individual gold companies. So I went and bought their ETFs. This is big ones. This ones are small. Gold are they called refineries? Or gold, whoever makes the gold and brings it in, gets it into its form that needs to be. I bought GDX and GDXJ. I bought them back in the downfall. They've done great for me, but I don't care about that. I care about gold long term. And I will hold these for a very long time until I think gold has gotten a little too overwhelmed. And I've written covered calls on these, and I'm gonna keep riding them up. That's my goal. My goal with gold. So I do like gold long term.
What about silver, Paul?
I haven't looked at silver. I'm sure silver's been up a lot lately, I think, hasn't it? It's been up a ton, but it's just like another thing. I mean, I was looking at the economics of gold in terms of how much it costs to actually convert an ounce of gold into its end use, and the price is way higher than that right now. So that's the reason I look at it.
Rick, thanks for watching. We're not going to get very far if we bring up Bitcoin. Paul is a heavy no on Bitcoin.
Well, let's talk about Bitcoin.
Okay.
Guys, the reason I'm no on Bitcoin is because I look at Bitcoin as people saying it's a currency, right? But to me, what's behind that Bitcoin currency? Oh, I don't even need the board. What's behind the US dollar? The faith of the US economy and government. What's behind Bitcoin?
Faith in Bitcoin by its followers. By
its followers. What's that worth? So what do the followers suddenly stop caring about it? Like they did from the end of 18 to recently. It was down to $3,000. It went from $19,300 down to $3,000. I think you'd say that's a lack of faith. And now it's back up to $20,000. The dollar doesn't lose 80% of its value and then come back. I mean, that's just, to me, first off, I've never known anybody to buy anything from Bitcoin. I'm a libertarian, and people think, oh, you must love Bitcoin. No, I still believe the government's there to help, engage people and get commerce going and back it up. But Bitcoin is it's just all pure mania right now and euphoria, and I don't believe in that. I don't do that. So
Leo brought up the idea, and Leo, I challenge you on this. I had a bunch of Bitcoin, so I just want to get your thoughts. He said the idea of blockchain data and safety.
Long, guys.
And so Leo,
that's been around for so long.
I guess the point is, like.
And guess what? And the other thing is, Acon has a cryptocurrency. Go start another U.S. government currency. How's that going to go?
Yeah, I mean, Leo, I don't mean.
No, let's focus on that. Go start another currency. How's that going to go?
No, I guess I've just heard this. You're right, Paul, but I've just heard this. Like, well, it's blockchain. What in the hell is blockchain?
By the way, that's like everybody saying Tesla's not a car company. It's just it's blockchain. Guys, we've had blockchain for so long now. Mm-hmm. If you want to invest in blockchain, find a company that goes and uses the technology to go do what you think is important. It's not about the currency.
Benjamin says you buy stuff in Bitcoin. Guys, I'm not saying it's not a plausible currency moving forward, but no one brought this up. No one brought this up when Bitcoin was at 5,000, but we were done with Bitcoin. We were done with it. So only now that it's got skyrocketed up back again to $19,000, all of a sudden now it's a viable choice again. So
you can't tell me that something that.
Go ahead, Paul.
You can't tell me that something that goes like this, and like this is stable.
Stable and follows fundamentals.
Guys, it doesn't work. I mean, listen, could it still work out? Could it go to 100,000? Could it go to much? Sure. But I would say it's probably just as likely to go to 2,000. You have to decide. It's a pure speculation play, because at the end of the day, how many cryptocurrencies are out there? They get started like this. Acon, 50 Cent, or maybe I wasn't 50 Cent. They start cryptocurrencies all day. Go start another U.S. currency. I'll wait.
Yeah.
You can't. So to me,
It said Leo said banks are starting crypto. PayPal
exactly.
has crypto.
Facebook talked about having a
Facebook
crypto.
has one, absolutely.
There's no barrier to entry on crypto. Well, there's a barrier to entry, but all these companies can start them. It's like, okay, start a U.S. currency. At the end of the day, you're still paying for your house in U.S. currency. You're still paying for your car. Does that mean that won't change? Absolutely not. That could every bit change, and Bitcoin could become the cryptocurrency. But like we said about Amazon, Amazon was the tech stock, and here's its chart.
Add drama. Great.
Okay, it could work, but we might be here on Bitcoin.
Yeah.
It might still go to here, but guess what? It's still going to go down to here. And I tell you one thing, you're not going to be happy here, and you're probably going to sell it there because it takes that to get to that price. It takes everybody bailing on it.
Guys, what Paul has sort of definitely taught me over the past couple of years is that you don't need a Bitcoin or a NEO to have a wonderful life with millions of dollars of retirement, which should be a vast percentage of our goal, I would think. And so I at times, folks, I get into things like Bitcoin and I get into the hype. And then I look around thinking like the smartest people I know with the most money aren't doing this. It's all your friends on Facebook who bought Bitcoin.
Well, no, smart people are doing it right now.
Yeah, well, maybe I'm wrong. It's just like that's the feeling I have, you know. Like, guys, I collect this stupid game Magic the Gathering cards, and I think
I'd rather you buy Magic the Gathering cards than Bitcoin.
And I think that I'm going to buy this card today, hold it for 50 years, it's going to be worth like $1 jillion, and I'll be a millionaire off it. But then I look around at the people around me who also engage in this, in these cards, and they're like low. I don't even want to say.
I was ready to draw something.
Go ahead, Paul.
Here's the cliff. Here's the lemmings. I don't know how a lemming looks. I hear all the lemmings, and they're like, I'm gonna stop before the cliff. I'm gonna stop before.
I mean, just recently, somebody in my family who bought Bitcoin at 20,000 and then didn't sell at 3,000 just because like it's already a complete loss.
That's a valid point.
Then when it went up a little bit, they did sell, and now they're like, oh crap, I just sold 3 months ago. Look at me now. I mean, it's just like, I guess the point is you don't. Paul is coaching that you don't need to do that.
Well, it's not even don't need to. It's just hard to do. It's hard to justify the investment. And I look at it saying it's not an investment because what's behind it? I'm always going to say to you what is behind it. At least with a Honus Wagner baseball card, you're not making more of them. That's the only one ever it's going to zit. Is it still speculation? Absolutely. But you can't make any more of that Honus Wagner baseball card. You can't make any more of those Black Diamond Magic the Gathering cards.
Black
you can't
Lotus.
What was that?
Black Lotus.
Yeah, Black Diamond. Isn't Black Diamond like a strip club or something probably?
Probably, yeah.
Or no, it's the skiing thing. Skiing, yeah. So I'm looking at going, that's what I look for in every investment. How do I make my money if it's not working? If the stock isn't going up? Well, I'm making dividends, the balance sheet's getting better, etc. I just don't understand that. Same with gold. I can't make money just by buying gold because I don't understand how gold in and of itself has value. But I see how people value it, and I buy the refineries, or whatever it's called. What is it? It's not refineries. Is it refineries?
Mining.
Mining, thank you. The miners. I buy the miners who do it, who mine it, make it into gold, and sell it to the end user who wants it.
Talk about that fool's theory again. I thought it was pretty
Greater fool theory.
Tell our listeners about it.
The greater fool theory is I have no basis for buying this, but I'm going to buy it so that somebody else buys it for a higher price from me. The greater fool theory. There'll be a greater fool out there than me to pay me a higher price. It works until it doesn't, but when it doesn't, it is ugly. It's the same analogy about leaving it's the same analogy about musical chairs and leaving the room with a fire. You're not going to be able to get out when everybody wants out. You won't be able to get out at a price you want. Because guess what happens? Now this is what we've seen with Bitcoin. We've seen this, and we've seen this. So what are people going to say? When it goes down like this again, they're going to say, don't worry, it came back before. And then all it takes is boom.
I guess people don't think that could happen, Paul. And the funny part with Bitcoin is it already happened. I mean,
and guess what? 150 years of stock market and investment history, 500 years of investment history. Go look at every bubble. And just sometimes Google biggest bubbles in history. Tulip mania, all these things that have happened going back, South China Sea Company, going back hundreds of years. They all go the same way.
You know, we had this exact conversation. I asked you 2 or 3 Christmases ago when Bitcoin was sub 8,000 before the huge spike up to $20,000. You said these exact words to me, and I didn't believe you. In fact, I was reading the articles that the Bitcoin lovers were sharing that by this year, right now, these coins would be worth $1 million.
Yep, and they're not.
And guess what? These articles are now just shifting a couple years down the road. They're just saying the same thing. Now in 2022, that's when the coins are going to be worth $1 million a coin. And anyway, it's just you've sort of convinced me. And what is the convincing? The convincing is without fundamentals and the math. We always say, I implore people to, like as Paul teaches, is just trust the math, not the hype. This is like without fundamentals behind it. I'd rather just put my money in a safer company. I think.
Somebody did sign up for the Patreon, so I thank them. And that's exactly what I tell Seth, and he gets it. I'd rather buy a company that even if stock stays stagnant, actually, should we go into this now, like about how you make money in a stock that stays stagnant?
Well, again, Paul, I brought up, please do, because I brought up this, what is it called? The fool's
Greater
theory?
Fool theory.
The greater fool theory, because I looked at things in my life, Paul, like Magic the Gathering cards, where I think it's an investment, but the only way I'll ever make money, I literally look at myself, Paul, is I'll buy a card at $10, and then the only investment is I have to find someone in this world to buy it for more money than I just bought it for. And people call that an investment, Paul.
Yep, it's not though.
Why is that?
Because an investment is one in which you have a reasonable expectation of getting your money back, and you have some form of getting income along the way, even if the price doesn't go up.
So, for example, if I invest my money instead of a magic card versus some real estate, while that card goes up, it's also paying me money on a monthly basis. That's an investment, right, Paul?
Yep.
What are you drawing up there?
Just keep talking, Peanut.
So anyway, Paul, as you always said, once we hit like 2 o'clock, I don't know what it is in this world, and if you guys are watching,
it skyrockets.
It always our live feed always skyrockets at 2 o'clock. I don't know, is it like what's going on? Can
somebody hit like buttons and also sign up for the Patreon? I really,
Thanks, guys.
I really need it to,
Paul,
to calm me down.
Just
I need to do it to pay for my meds.
Yes, and just like that, 20 more people jumped in. We welcome you to the channel. We've been arguing for an hour and 15 minutes now. Paul's been screaming at everyone, including myself. Most of the camera operators, our producer, my son, and he's going off the chain today. And he'll go off more if you join the Patreon. We will be doing a live show tonight where Paul will be cursing up a storm. You were on fire today, Paul, but welcome. And Airbnb you buy, and someone just jumped in and say, you've missed out on that discussion. But go ahead, Paul.
So guys, when you buy a company and you don't see the price going up, as it happens sometimes in value investing, I sit there and say, it's okay as long as the company's financially getting better. Eventually, the market will pay you for your value. This is hard to understand because we all look at the price of the company and say it's gone nowhere. How can it be paying me when it's not happening? So I always tell people, when you buy a company stock, you're buying the company. Let's say hypothetically you owned a company outright yourself. First year it does $10 in revenue, has $3 of profit, and has $5 in the bank. I'm keeping this very simple.
Okay, this is a company like AT&T or something?
No, like a mom and pop. Well, let's assume it's AT&T. It doesn't matter what the company is, but
not real numbers, but go ahead.
Next year it has $11 in revenue, then 12, 13, 14, 15.
Sounds boring.
Profit. 3.5, 4, 4.5, 5, 5.5.
Nothing massive. No hype, spikes, nothing marvelous.
Now, before I go into the bank account, what's a company that makes $3 in profit worth today? Let's say 15 times that profit. So it's worth $45. Can we all agree on that one? The historical average is 15 times earnings. Profit. Okay, let's say it always stays at $45 until year 4. Now, here's your bank account. It has $5 in it today. You're taking $3.50 of profit. Now it has $8.50 in it. Adding 4, $12.50 in it. Adding 4.5, $17. Adding $5, $22. Adding 5.5, $27.50. So, as a value investor, you have a company that's making $5.50 a year with a bank account of $27.50 that's selling for $45. Would you buy that company all day in the private market? Because theoretically, even at 10 times earnings, you're at $55 a share, and you have $27 in cash there. So you have $82 in value selling for $45. That's the idea of value investing. That even if the price doesn't dictate itself, over time, the company will then buy back its shares where it goes to basically zero. So every single time it buys back its shares, you're getting a larger percentage of the company. And guess what? I will tell you right now that if a company is doing this, it is just a matter of time before people recognize it. It always happens. Microsoft did it and they made every excuse in the sun. The financials were so good. I think the same thing of Intel today. But even on an individual basis, if you own this company outright, would you be upset if the market said to you, if you didn't know the market price, let's say you own this company overall, would you be upset owning this company that you paid $45 for? Let's say you bought it day one for $45 and there's no stock market to tell you what it's worth. Would you be upset owning this company? The answer is no. You have a great return here. Even if people don't recognize the value of 15 times this. Because at the end of the day, the reason we get upset is because we have Mr. Market telling us how much our stock is worth today based on the market price. But you have to look at it like you did not know the price over the years.
Enrique is saying add a dividend to this and it's even sexier.
Yeah, but a dividend would take away from, I'm sitting there saying that you're right, but a dividend would take away from the bank account. So let's say it pays a dividend here, pays a dividend here. So you have less bank every single time, but still really good. But you're right. That's the whole idea of value investing. It sounds simple, but it is very difficult to then see the stock go from 45 to 40 to 35, and you have to sit there and say, okay, it's an even better deal. That's the hard part. That's where the emotion gets involved. That's where I get messed up too, going, man, what did I miss? Did I just miss something? And sometimes you do. But that's the whole idea here. I look at buying a company like buying the whole company, and if this happens along the way, I'm cool with that. I'm perfectly fine with that. If this happens, I'm cool with that. I'm perfectly fine with that. Over and over and over again, because my goal is if I own 30 companies like this, it's just a matter of time before the market goes, wait a second, it's selling for 45 bucks. It has $28 just in cash there. So I'm basically buying the company for $17. I'm buying $5.50 a year of profit for 17 bucks. Yeah, I'm doing that all day. So somebody pays 18, then somebody pays 20, and then they realize, wait a second, a company making $5.50 a year is worth $83. And before you know it, it's at 83 bucks. And you bought it for 45. And you're happy as a clam.
Dumbing this way down, what would this graph look like for something like Tesla, Paul?
Oh, for Tesla? It's not a graph, first off, but Tesla's growing its revenue a lot, but also, and profits starting to grow, but that's now more of a multiple, purely a play of multiple. We looked at the Tesla, it's a $600 billion company. What does it have to actually make in order to justify a $600 billion market cap? They've got to grow at 20% a year for a long time. And that's where I'm sitting there saying, I don't, or 25% a year. I don't see it happening. Is it possible? Absolutely. But then you got to be okay buying today at this price and 10, 15 years down the road when it hits the targets, still worth the same price you paid for it. And who's going to be okay with that? That's why it doesn't work.
Corey's saying, so you're saying you're buying Intel. You own Intel at the moment? We have liked Intel.
Well,
in the past.
I like Intel sub 40. Remember, guys, I like buying companies for much less than I think they're worth. I personally believe Intel's worth around $70 a share. It's at 50, but I'm only buying at 45 because I want to get a certain return on my money to account for my margin of safety. So I'm a buyer of Intel sub 45. I have some shares right now. I bought at 45.
Mr. Kumasagati said, what a name. So the price of a company's stock should be 15 times their profit? Is that the same as PE?
That is correct. PE is the same thing as 15 times profit. And over long periods of time, that's what the market average is. Now, the faster growing the company, the higher the PE you should be willing to pay. The slower the growing or one that's declining, you should pay a less PE. Because if it's declining in revenue and declining in profit, you want to be able to pay less for that future stream of profit. And if it's growing faster, you should be willing to pay more.
A lot of people are reminding me in the comments, which we love the fact you guys are commenting. They said, Paul, they said, well, on the West Coast, people are finally waking up and joining the channel. I'm thinking 11 a.m. is when everyone wakes up. Like, I know, I understand there's time zones, but okay, maybe we should just start the show at 2, Paul. But
well, I'm sorry for my rant earlier. I love you guys immensely. But at the same point, these are very, very good conversations. And I like talking about the strategy stuff on how you look at companies individually, because this is what I try to grasp everybody. I'm trying to explain to everybody how to look at stocks while ignoring the market price, which is a very, very difficult thing to do. It's so hard to do that, but that's what I'm trying to ingrain in everybody here. Worry about the revenue, the profit
margin,
the margin, the balance sheet.
Shares.
Yep, shares.
And free cash flow, Paul.
Yep. Free cash flow, balance sheet. Those are the things you need to worry about. If these are all in a good area overall, and the company has a good future, you're gonna do well. It might take a while, but the whole idea is eventually, trust me when I say this, eventually people go, when all of a sudden Tesla, let me ask you this question, guys. If Tesla goes from 600 down to 200, are you telling me people are gonna be like, wait a second, I need to start making money somehow, because I'm not getting it from the company, and I'm not getting it from the stock price. They're going to start looking for other things. Oh, wait, look, Intel's a tech company, and it's selling for 9 times earnings. I'll pay a little bit for it. And all of a sudden it's growing, and the stock price goes up. When I started buying Microsoft in 2012, it was selling for 8 times earnings. And now it's selling for like 35 times earnings. It has gone up an astronomical sum. Okay.
I think, Paul, this is your 8-pillar analysis on companies, which we go and talk about all the time. This will be the app that's coming out. I think if you just even looked at this beyond just the stock price, this is like our whole show, basically, right?
Yep.
Like, literally,
A friend of mine joked and said, you probably have 800 pillars. I'm like, I really don't. Literally, the 8 pillars were created with Seth saying, how do you look at a stock? Well, I look at these things. I'm like, it's 1, 2, 3, 4, 5, 6, 7, 8. Okay, it's 8 things I look at.
Because my entire life, the only way myself and all of my friends ever looked at a stock was its price.
So I'm going to tell you what I'm going to do.
Go on.
When I have a bunch of stocks, I'm going to put them all together. I'm going to divide all the revenue by how many shares I have, and I'm going to pretend like I have one company that has revenue, profit, and cash flow. And I'm going to do my entire portfolio on these ratios. And my goal is to pay as little as possible, because if I buy enough companies that I will be wrong on some, I'll be really right on some, and I'm probably going to do pretty well in the middle. That is my goal. Warren Buffett suggests this in one of his annual reports from decades ago. Look at your entire stock portfolio as if they're one company. That's what you need to do.
If you're watching, I'm so sorry.
Actually, we should do that for the Everything Money app.
Paul, my phone hooks into the board that we're our soundboard, and when a call comes in, they can hear it on the live stream somehow, even though it's silent.
So you were criticizing me for my dings.
I know. Apparently, I couldn't. Guys, we don't hear everything you're hearing sometimes. So they're hearing a phone call come in. And that's what people are laughing about. I apologize. I got that. It's hilarious.
This is actually a good idea. I actually should add this to the Everything Money website. Is to sit there and say, put the number of shares you have of each company, put it all together, and it'll tell you overall how much you've paid. And that's the whole Everything Money idea, but also to tell you your total revenue per share, your total profit per share, and all that stuff, free cash flow.
Mason's saying the phone's ringing like an episode of The Office. Nicholas is saying it's Jake from State Farm asking about your shorts, what kind of shorts you're wearing.
These are all Fabletics. My boy Mo put me on to Fabletics. These are Fabletics, bro.
I can't believe that ringer's going through. Sorry about that, guys. All right, Paul, what do you think? You have been jamming for almost 90 minutes now. Do you want to keep going?
We'll talk at 7:30, kids.
Wow. Thanks, everyone. Little Stan just said, Fabletics suck. Thank you, Stan, for that informative.
Oh, Little Stan? Who's Little Stan? Wait a second. Is Little Stan Kevin or Connor? Who is it? So Little Stan, I will tell you what Little Stan is. You know what Little Stan is?
No.
Should I say it on here, Mo?
Probably not.
You know what Little Stan is? So
It's
Stan
Connor.
Hewitt Hall,
Connor.
they're calling my house Little Stan.
Oh, wow.
The new house.
He made a whole YouTube. He made a whole YouTube. Wow, this is a good level of busting
It's
chops.
definitely Kevin. If the person said it was Connor.
It's Connor, yeah.
Yeah, he said it's Connor, which means it's Kevin.
So your friends will make an entire YouTube profile just to bust chops during the live
Kevin
stream.
has no life. He just sits there and takes snapshots of his child and complains about everything in the world.
We will discuss Paul's
LeBron,
new house as
Baker Mayfield.
we will discuss Paul's new house as the months go on in the app, the Patreon. We do it all. Thanks for joining us. What a show, Paul. I mean, what a show. Don, you can hit that music. We're on the way out. Paul, thanks for your love today, your support of those who follow you, and for watching us. We appreciate it. Check out the link below for Patreon, and make sure you smash the like. Thanks, guys. Appreciate it.